Hello traders, hello everyone. As you already know, today the US is to release its inflation data, so the consumer price index and the core CPI could bring high volatility and sharp movements. So today I will talk about gold in this daily video analysis. I will talk about a potential downside continuation, and only because the bias is still bearish. I will talk about a trading scenario, but first of all, here is the disclaimer. Please read it. You can follow us on Instagram if you don't want to miss our Instagram content. Please subscribe to our YouTube channel. You can learn a lot from our videos. Personally, I'm waiting for comments. You can also like the video, you can share it. And don't forget that Learn to Trade team will never contact you directly, will never ask for payment. You can access our VIP groups only after purchasing a subscription. And let's take a look. First of all, so consumer price index month over month, 0.2% growth expected in September versus 0.1% growth in August. Consumer price index year over year, 8.1% versus 8.3%. Core CPI month over month, 0.4% growth versus 0.6% growth in the previous reporting period. Unemployment claims in the previous week, 225,000, okay, above 219,000 in the previous reporting period. So the US economic data could bring sharp movements and high volatility. Let's take a look, guys. So consumer price index, and let's take a look technically right now on 1 hour chart. Okay, downside movement, we have a major downtrend, guys. We have here the major downtrend line, and as you already know, the price failed here to stabilize above the major downtrend line. And the person I have descending pitchfork 1, 2, and 3. Okay, temporary retreat, rebound, retest here of the upper medium line. Okay, upper medium line, which acts as a dynamic resistance, and here something like a channel, potential channel and flag, and this channel was invalidated by this breakdown. Because if the price would have stayed within the channel, value breakout, upside breakout, a new higher high could it would have signaled the potential leg higher upwards movement, upside continuation, but breakdown and right now sell off. The medium line of the descending pitchfork is seen as a potential downside target, as a potential dynamic support. Okay, right now sideways movement. It has retested these key levels. Let's take a look also on 4 hour. So 1680, 1676. Okay, resistance zone, resistance area. So as long as it stays below this zone, below this area, the bias is still bearish. Right now it challenges this downtrend line here. So yeah, sideways movement here. Let's move this. Yeah, this one here. So because we have a resistance zone, resistance area here, it has it's trapped between 1661 and these levels 1680. So in the short term it moves sideways, in my opinion. And also if the inflation data will come in higher than expected, so higher inflation reported by the US, because let's take a look here, September. Okay, so the CPI was reported, or actually was released also in September 13. Okay, when the US reported higher inflation. Let's take a look here, also here. So September 13, 0.6 versus 0.3 expected, and also here 0.1% growth versus 0.1% drop. So higher inflation. And let's take a look on the here on the chart, trading chart. So September 13, okay, September 13, and we had a massive drop after the US, guys, after the US reported higher inflation. Please take a look here, sell off sideways movement, and then it has dropped it deeper because and also right now sideways movement here, the bias is still bearish, and in my opinion, if the US will report higher inflation again, higher than expected inflation, then maybe the price of gold could drop again, only because higher inflation is not good for the US dollar, okay? But higher inflation will force the Federal Reserve higher inflation will force the Federal Reserve to continue hiking rates, okay? And I don't know, big inflation, higher inflation again could force the Federal Reserve to increase the federal funds rate with 75, maybe 75 basis points again, okay, in the next monetary policy meetings. And in my opinion, lower inflation reported by the US could force the US dollar to depreciate, okay, and then this situation, this scenario could force the price of gold to come back higher, okay, maybe very breakout here, and it could come back towards the major downtrend line, towards the upper medium line again. So this is my scenario, this is my opinion about gold right now before the US inflation, okay, and higher inflation, and of course, if higher inflation could force the US dollar to appreciate, and if the dollar index will jump higher towards new highs, then maybe gold could drop, okay? Because in my opinion, after retesting the upper medium line here, signaled that the price could still approach and reach the medium line, which acts as a magnet. It could still attract the price, and a larger downside movement could be activated by a value breakdown here below the medium line, okay? A lower low here could signal a potential drop towards the medium line. Value breakdown here could signal potential downside continuation, deeper drop. Thank you guys. Don't forget to read the disclaimer. Thank you. Bye bye.